All right, sure. Let me see the chat. Cool, cool, cool. All right, appreciate you guys for being here. This is a little lesson on how to scale out and identify price targets. I really wanted to have this lesson because a lot of people ask, like, first and foremost, like, oh, how do you know when to get out? And I say, like, oh, the chart tells me when to get out. Or a lot of people ask, I don't know what you mean by the wicks, right? What do you like? What are the wicks are you referring to? What are the pivots that you're referring to? And so this is a great lesson because ideally, once you know the strat and once you understand where you're going to enter, right? Now you need to know where you're going to exit. One second, let me hear a little somebody noise. Okay, I think it's good now. Sorry, I'm just muting people. Okay, cool. So how to scale and identify price targets. Okay. So first and foremost, obviously, I am not a financial advisor. My content is for educational and entertainment purposes only and should not be taken as investment advice. Addicts Trades is not a registered investment, legal, or tax advisor or a broker-dealer. Nothing in the server constitutes professional investment or financial advice. Should you need such advice, consult a licensed financial or tax advisor. And then that's the rest of the disclaimer. You guys can read it. All right. All right. So what is a price target? So like the actual definition, right, of what a price target is a price target is an analyst's projection of a security's future price, one at which an analyst believes a stock is valued. So Apple, right? Stanley will all of a sudden say, "Oh, we have a price target for Apple at $220." So what do they think? They essentially believe that should be valued at $220. What you can see, like how that pertains to the market, what you can see happening in the market is that you can start to see volatility and price action possibly start to go towards that price target. This happens with a lot of analysts. So usually banks are credible, or not, yeah, banks are credible sources that are allowed to give like analyst ratings. Also, hedge firms are able to give analyst ratings. There's so many other types of different entities that are able to give price targets, and you'll usually see a reflection in the market. You should pay attention to those. Now, in options, however, and how we see price target as is that we see price target as potential areas to scale out, scale into a position, or take profit. Okay. So I'm going to be going over scaling out.
Wait, can I add to that? Sorry.
Yes, sir. Yes, sir. Yes,
so
sir.
Us as options traders, we need to give ourselves the respect of the title. What do I mean by that? Look at the wage of some options traders and compare it to doctors, compare it to engineers, compare it to astronauts. We need to give ourselves the respect of an options trader. What do I mean by that? ADEX mentioned banks giving these tickers price targets. Us as options traders, we need to incorporate anything and everything that is given to us. Any information, we need to be able to process it and act accordingly. So if you see a monthly trigger, if you see a weekly trigger, if you see a daily trigger, if you see an analyst trigger, if you're trading AMC and it's somehow at around 69, like you need to think about all this shit and like the price target of not only the banks, not only the monthly pivots, but the price target of the majority. And by that, I mean like Twitter, like everyone gives a price target to something and you need to act accordingly. But yeah.
Yeah, correct. There's Walter Bloomberg. Some mornings he'll post like, oh, these analysts like these upgrades or downgrades or these analysts price targets. And what he's essentially saying is that these upgrades, some company, some bank, or some form of entity that's credible said that this company, they believe that they should have an upgrade, as in their stock of the price should be valued higher, it should be higher, right? A downgrade, that this stock of the company should be valued lower, right? And you'll see the market try to fluctuate in volatility, and you can see it try to go towards that whatever the intended price target is. So just like what Leon said, yes, you do have to take. You're supposed to take everything into account. You'll know, yeah, you do take everything into account. Like every morning, if you see that, like there was one morning where like one of the bank stocks, I think it was JPM, got like an upgrade, and then as soon as market opened, it just flew. You know what I'm saying? You take those things into account. So that's the price target. And I'm going to go into scaling out. Okay, so scaling out. So scaling out means to get out of position in increments as the price climbs. It's a profit-taking strategy that helps reduce the risk of mistiming the market's high. However, it can also risk selling too early in I'm sorry, that was a typo, in a rising market. Scaling out is seen as a risk-averse strategy that can reward investors if the price of the stock subsequently reverses trend and falls. Okay, so why do we scale out, right? The reason why we're supposed to scale out is because we should be taking profits as we are getting in profits and as our position is increasing in price, right? So like, let's say, because we are options trader, as long as let's not think about the Greeks, right? Let's just say, like, in terms of the respect that like, if the price is just going towards our strike price, we know that we're going to be profitable, right? And I'm not taking Greeks into account. So as it's going towards our strike price, you are supposed to be scaling out. And a key thing about scaling out, right? As it's going towards the strike price, you're supposed to be scaling out. Notice how I say when it's going towards. So a lot of traders, what they don't realize is that with options, right, you literally, if you're looking at the candle, as it's like going green, let's say you're in calls, when it's green and it's pushing up, you're supposed to be actually taking profit as it pushes up. Whereas it gets to your price target and it's coming down, and then you start taking profit. Obviously, like, in the heat of the moment, and when it gets to our price target, sometimes we're not going to actually do what we're supposed to do, but I'm telling you what you're supposed to do, and whether or not you like actually do it, it's up to you. But you will notice, you will literally look at your contract and see and look at the price of the stock as it's going up. You are going to be increasing in profits. But then when it hits your price target, and after it's done, after like it just hits that price target and starts coming down, you'll see like a decrease in profits. So it's literally the whole saying to sell in strength. That's what they mean by that, is like, as it's going towards your strike price and as it's going up, you're supposed to be taking profits. Okay. Let me go to the next one.
Wait, again.
Yes.
So I'm here to give, like, my perspective, and not only my perspective, but another perspective. This is an example that I'm gonna use from myself, and this was yesterday, Friday, during market hours, right? ADEX was talking about, as it gets to your price target, you scale out. Yes, okay. I'm here to give another perspective. I fully loaded on NVIDIA long, and it instantly went red, right? So another way to think about scaling out is it instantly went red, and a part of me was like, it's going to catch up, right? It caught up, but one side of my brain was saying, scale out once you're in the green. You don't need to do that. The point of scaling out, and the only point of it is, okay, so yes, you could think about taking profit, but the number one rule is, and always will be, to de-risk. You always need to risk as little as you could as you're in a play, depending on what the price target or the risk to reward will be. So with that being said, I just want to say, like, if you're in an options play and obviously it goes against you, you could always scale out if it is not going according to your plan. But yeah.
Actually, I'm glad you brought that up, because I was going to mention that as well. So scaling out has to do with risk management. It doesn't have to do with, like, it's a profit-taking strategy, but it has to do with risk management. And what Trooper said is that, like, the example that he gave is that, let's say you're in a play, you have a lot of contracts and it's going against you. A lot of people, right? Like, or not a lot of people, but just depending on, like, your emotion, and, like, the more contracts you have going against you, you might be, like, really emotional about that, or you don't know what to do. You're gonna either too eager to cut it, knowing that it could reverse or things like that, right? So what you can do is that you can minimize your risk by like actually cutting some amount of the contracts, right? And let's say you just have like two now, right? You can easily manage two, and you can see if that two actually wants to go in your favor. So what's interesting is that because this happened this week, and I forgot what play it was where I told members to get out, but then all of a sudden it went in our favor. And I told members to get out, but I said like hold. I said, okay, you know what? It's not going in our favor. I said like cut it, but just in case it does, like just leave some, right? And then it ended up going in our favor. And that play.
Wait. This connects to the recent question. Someone said, in terms of scaling out, as Trooper said, what if it was a fake out? How do you avoid it? Okay.
Oh yeah, I'm going to talk about
Continue.
that.
Yeah, exactly. Continue.
I'm going to talk about that. Let me see if I can see which play it was that ended up getting in our favor.
As Adex looks through the plays, in terms of scaling out, if you're in a fake out, you just got to think about it. Like so one of the biggest problems that I dealt with as a young trader was position sizing. And what I mean by that is I would position size way too big and it would go red, and my mind would be like, fuck, I'm in the red. You know what I mean? So in terms of fake out, if it's a fake out and you want to leave some running because you think it might just come back, it might just sound very simple, but in all honesty, and this connects with any trader, you cut and you leave whatever you're willing to let to go to zero. And you don't need to let it go to zero, but it might go to zero. So if you're like 5 contracts deep and it's like above like 200% of your regular position sizing, you want to just cut enough to where if you lose some, like it's not going to fuck with your psychology, because you will make it back. And that's like one of the main reasons about scaling out when you're in the red. You need to live to trade another day. Like we constantly hit 100%ers, we constantly hit 200%ers. You cannot let one trade that's negative 50% just completely let your whole bag go to zero, because we will find that next play.
And I'm glad. Thank you for taking over. So I ended up finding the play that it was this week. So it was Airbnb. So Airbnb, we took it on the 20th, right? And it was fucking with us. Like it was going down. And then I told members, I was like, you know what, cut it. It doesn't look strong, so you can cut it, but leave some just in case it wants to end up running, right? So what had happened is that Airbnb ended up running. And so the ones that I just ended up having like 2 contracts just to see if it was going to go crazy, right? It ended up going 100%. So like, let me give you guys an example. If you guys have gotten in the Airbnb play, or if you guys get into a play, this is just a hypothetical, you get into a play and let's say you have a lot of risk, right? Let's say you have a lot of contracts. If it's not going in your direction, and let's say you want to cut it at 25%, or 20% because it's not going your direction, you can take off, let's say you have 10 contracts. You can take off like 7, right? Because let's say your mind is willing to like have 3, and let's say this is a Monday or Tuesday and you're willing to let that 3 do whatever it wants, right? If it ends up going in your direction, those 3 contracts, depending on how much it ends up going in your direction, right? Those 3 contracts can end up making up for those. I know it doesn't seem like it but it can, depending how much it actually goes up. It can make up for some of the loss from those 7 contracts that you took out. Maybe not all of it, but it can help some, right? And remember, the market is all about risk, right? You want to try to minimize the amount of losses possible. Okay. So if you can end up taking some profits from like the ones that you left on, that is you scaling out, because remember, if you had 10 and it was going down, your mind would probably not be able to handle it, and then you would just either take it out, and you would either take out all of the contracts, and then you would risk not like being able to actually have some profits. All right, so that's in terms of scaling out. I'm going to give you guys some possible scenarios that I personally use. These are my scenarios that I use. Okay, so scenario 1, right? So at the first price target, depending, and these are all depending on the type of plays, and this is depending on like what day of the week and if it's a swing or not. And I'll be going into these different types of scenarios. So in scenario one, the first price target, I'm out 50% of the play, right? So let's say I have 10 contracts. So as it hits my first price target, I'm out 50%. Then I leave another 50% and I wait for it to go up more. For this scenario, this is the two leg scenario. And the reason I should have wrote two leg, I should actually have names for these, but this is like the two leg scenario, right? If I'm confident enough that this play is going to give me two legs, then I'm going to, the first price target, I'm going to take out half. And then when it gives me the second leg in my second price target, I'm going to take out the whole position and I move on to the next. Okay. So that's scenario one. And you guys can write these scenarios down. First price target, you're out 50%. Second price target, you're out 100%. Okay. This is my two leg scenario. Scenario two. Okay. So this is a scenario where I have three price targets and I am confident that it's going to hit three price targets. Usually this will be like a gap fill type play. Why? Because in order for the gap, let's say in order for the gap, and I'll give you guys, remember, I'll show you some charts. In order for the gap to be filled, right, you have to first enter the gap. Or yeah, you first enter the gap and then you fill the gap, right? So when you enter the gap, that is when I'm going to be out 50%. Okay. Then when I fill the gap, I'm going to be out another 50%. I want you to remember this is another 50%. So let's say if you guys, I'm going to go with 12 just to make it even, right? So let's say I have 12 contracts. Okay. I have 12 contracts and then I'm out 50% on my first price target. And let's say this is when it touches the gap. Okay. So I'm out 50% when it touches the gap. Why am I going to be taking some profits when it touches the gap? Is because maybe it might not want to fill the gap. That maybe, you know what I'm saying? Let's say if we're going to the upside and the gap is up, maybe there's a big ass supply zone there or big ass resistance and it won't fill the gap. So at least I took some profits there. Okay. First price target at that. So when it enters the gap, let's say now we enter the gap and now it's actually going up and is about to fill the gap. My second price target will be when it completes the gap. Okay. And that I'm going to be out another 50%. So that now I'm only going to have a quarter left. So let's go back to the example of 12 contracts. My first price target, I'm out 50%. Second price target, I'm out another 50%. So I had 6. Then I'm at another 50%. Now I have 3. Okay. So I hope that makes sense. So now the gap is filled. Okay. And now you have 3 contracts. Let's say that not only does it want to fill the gap, but it wants to continue going, right? If it wants to continue going your direction, going in that direction, I now start taking, when it hits a third price target, I now take out 90% of the play and I leave runners. Okay, so I'm going to say that again. When it hits my third price target, and this is like a gap fill play, and this is the typical 3 price target play. What I call a 3 price target play is that if you look at my watch list, you'll see 3 price targets. If you see 3 price targets, you'll see like PT1, you'll see PT2, and you'll see like weekly PT, right? You'll see like weekly pivot or something, right? If you know that, oh, we can hit possibly these 3 price targets, you start thinking about this scenario where I'm going to be out 50%. If it hits the second one, I'm out another quarter. And then if it hits the third, I'm going to be out majority of the position. I'm just going to leave a runner or 1. Okay. And the reason why you leave a runner is because that runner can end up doing wonders on your account. I can give you, and I keep on saying it because there's been a lot of examples for the last couple of weeks where the runners end up going ballistic and paying you. Okay. So remember, out 90% on your third price target and you leave 1 left. And I'm going to tell you, don't worry, I'm going to tell you guys where you cut them if it doesn't go your way. Where do you cut your runners? Okay. I'm going to tell you guys about that. Okay. This is a scenario 3, and this is scenario 3 is a part kind of like the scenario 1 where it incorporates the 2 leg, and I like to think of scenario 3 as the beginning of the week plays, right? The beginning of the week plays. I talked about this a lot in live stream, but I want to actually give you guys like what I'm actually talking about. Okay, so hold on. Okay, we good. All right, cool. So scenario 3, this is when it's kind of incorporating scenario 1, and this is when the plays that are usually Monday and Tuesday, the beginning of the week. Why? Right now, the reason why is because depending on the magnitude of the play and depending on if it hits like my weekly trigger to go like 2 up or 2 down on the week, right? I know that this play could potentially keep running for the rest of the week. There's some plays that keep going down, yeah. Let's say if it's going down, like it hits your entry on a Monday or Tuesday, it'll keep going down for the rest of the week. It has a TTO maybe on Thursday, but then on Friday it went back down, and so you could hold through that if you had a runner. Um, and I talk about it like, yo, it's Monday, just hold the runner for the rest of the week. I say like, just hold one for the rest of the week and just see what it does if it wants to keep going down, because that runner can end up paying you a lot, right? So how does that work? This first price target, I'm out only 25% of the position, because and I'll give you the scenario. Let's say on Monday it goes 2 up on the week. Like let's say it's an inside week, right? It's an inside week breakout, and it goes 2-1-2 up on the week. So because we went 2-1-2 up from the week, I know, all right, this play gonna take a week, right? If you guys have been in my live streams and my strat beginner classes, you know what I'm talking about. How if it hits a daily trigger, that play is, I think of it as a day trade. If it hits a weekly trigger, I think of it as 2 weeks out. If it hits a monthly trigger, I think of it as 1 to 3 months out, and so forth, right? So if we go 2-1-2 up on the week, on a Monday, right? I'm like, okay, in my brain, I'm like, all right, we went up 2-1-2 up on the week. So this play has magnitude to actually continue going. So it going 2-2 up on the week, I know I have at least 2 legs. So I'm out 25. So on my first price target, right, I'm only going to be out 25% of the position. So if I have 12 contracts, I'm taking out 3. So I have 9 now, because I know that it's probably going to retest that daily entry and then come back up, right? When it comes back up and then it makes the higher high above, you know how when I say, oh, and now I say, oh, we just made a higher high, right? Oh, we say, are you still in the play? We just made a higher high. When we make a higher high in contrast to the higher that we took profits on the first one, that second higher high, you can take out 75% of your position. Okay. You take out 75% of your position, and now you only have 3 left. You're only gonna have 3 left, right? Because you had 9, right, after you took out this quarter. Then you taking out 75% of it, so you take out another 6, and then now you're only gonna have 3 left. So that 3 left, right, you're going to wait for your third price target. And that third price target, depending on that magnitude, will either occur the end of the day, will either occur the next day, or will occur 2 days later. Okay. I want you guys to be thinking in scenario 3s, because why do I want you to be thinking in scenario? No, actually, I want you to be thinking about all scenarios, so you just know, all right, this is the one that I'm taking. This is the one I'm taking. But the reason why, I really like these scenario 3s, because these are the ones that can actually the runners, right? Like this was XPEV last week. This was like AMD puts last week. It kept going down. It would come up intraday, but then the next day it would gap down. Then it would come up intraday, and the next day it would gap down. So if you just held through that, you made hella profits, because it just kept gapping down further and further, right? And so this is the one where I'm holding for the whole week type shit. And so this was like the AMD and the XPEV where I held the whole week, because I was like, no, it's gonna keep going down. You know what I'm saying? And then you just hold that last runner, it ends up being 400, 500%, because it kept going down. So this is my scenario 3. Let me see if there's any questions. I see some in the chat.
There is a question. Someone said, this seems different than typical strat groups. Aren't we supposed to scale into plays with starters and then add when we see it in force? If you don't mind me, I'd get my opinion.
No, wait, no. Let me say, what's up?
No, correct me wrong if I'm, but so what ADEX was saying was, you enter a play, and for example, if it's a daily and if it breaks a 2 up on the daily compared to a weekly, you don't want to scale more in if it does retrace, because at that point you're just averaging down. But if it's a weekly or a monthly and it breaks 2 up on a weekly or a monthly pivot, and it retraces and it hits a 2 down, and then you see a 2 up, and it's not necessarily past the trigger, but if you have, I guess, like conviction in that it's going to get back above it, then you can add to the play. But I'm not a strat trader. 8x is more. So again, I would like to hear you prove or tell me that I'm wrong, because that is a good question.
Oh, so this is a great question. So right now I'm talking oh shit, thank you. Cool. I got a message from Zoom. So this is this is just in terms of scaling out. I'm going to be talking about scaling in as well, but this is just in terms about scaling out. And the reason, and this is like for daily triggers. This is mostly considering daily triggers. Why? Because we also take day trades as well, or I also take weeklies as well, and I also do day trades. There's going to be some day trades where you're only going to get like 30 or 50%, because the day trade is like, if it takes that, let's say it's an inside bar breakout, right? And let's say it's a 2-on-2 up on the day. That day trade can only last maybe, let's say, 2 hours, and then it starts retracing. And then let's say the next day it goes 2 down on the day. So the play is essentially done if you're in a weekly. So in that type of play, I wouldn't be scaling in because of the fact that the magnitude of that day trade only lasted that day. But in different type of my swing plays, those are the type of plays that I'm scaling into, where I start with a starter and then I add into my swing trades. But on my day trades, I'm usually like, because of the fact that I only have 3 pivots, or I have 3 or more pivots, right? I want to have potential price targets for my day trades, and so I can see them on the daily where I can have those price targets. But that is a very great question. That was a very great question, and I hope I answered that question. Let me know if I did it or not. Strat gang.
I kind of had the same question as him.
What's that?
So I do have a question on that. Would
Yes.
you scale more in as soon as you see the 2 down, 2 up reversal? Yeah, right. You need to wait for a reversal, obviously.
Would I scale more in if I see a 2 down, 2 up reversal? Is it it's for a daily, like for a week?
Preferably on a larger time frame, so like a 30-minute or a 1 hour. And scenario is it breaks a weekly or a monthly pivot.
Okay. All right. Yes. So I would scale into a 2 down, 2 up.
Got it. All right.
And
Awesome.
I can show you a couple of examples.
Elder strat.
You know.
Strat.
Let's see. Okay. All right. So now I'm going to be talking about the wicks. Okay. The wicks are essentially how I make my pivots. Okay. I'm sorry, not how I make my pivots, or how I make my price targets. Okay. So the wicks. So the wicks are very important. Okay. The wicks indicate supply and demand zones. They indicate support and resistance levels. They indicate areas of market participation, and they also are price targets. So they show you where you can cut, where you can trim, or where you can potentially add and scale into your position, right? And the reason why I always emphasizing the wicks is because you will see in the examples that I show, and we can actually show like examples from any of the charts that you guys want to see. You will see how the market reacts to those wicks. You'll see that previous market participation is still occurring there, and then you can either add, you can trim, and then if we go above, then that supply zone now becomes a demand zone, and then you can add in that position, and it continues going up. Okay, so I'm going to talk about the wick. So this right there, this was the whole presentation that I just wanted to talk about. I'm going to be going into TradingView so I can actually show you guys examples of the wicks, how we scale out, plays that we took in the past, and things like that. So any questions so far? I mean, we had great questions, but any questions right now before we go on to TradingView? Let me know. Let me check beginner chat questions as well. Okay, no, none beginner chat questions.
Okay, that's on defense.
I don't have a question, but while you're checking your things, I just want to add, for example, 8x used the Airbnb example from Friday. A lot of people are strat based, and I mean, it's an amazing strategy, but there are other things that you could do. So for example, we saw Airbnb retrace, and it was at about 160. And the 165 and the 170 open interest had, the 165 had 50% of the volume for Airbnb at the time, and the 170 call and put side had about 130. So in terms of scaling in and scaling out and how to identify price targets, this is just another strategy. It's not strat based, it's more so I guess technical based, but the 165 strike had half of the volume that Airbnb would have on the put side alone. So I mean, I said it even in the Zoom call, like that is going to be a hard target. So you could always use like open interest, and where you could use open interest and psychological levels as a reason to scale out.
Okay, let me do, let's see, was it AMD? Yeah, it was AMD. It was AMD. It was AMD. Okay. Share. Okay. Do you guys see this? Can you guys see my trading view?
Yeah, it's visible.
All right. Sure. Okay, cool. All right, so this was an AMD play, and let me see Discord real quick. Go on Discord. Give me 1 second. Okay. All right, so what I'm going to do right now actually is I'm going to, yeah, this is what I'm going to do. I'm going to actually do it here. So I'm actually going to have a fresh chart so you can see exactly how I drew my pivots, okay? And I'm going to do it just for the, yeah, all right, cool. This is what I'm going to do. Okay. Okay, so I talk about these pivots, right? And the reason why I talk about these pivots is that you're going to see market participation occur at these pivots. Let's draw these pivots out first, and then you can probably get a better visualization of what I actually am talking about. So first of all, this. Okay. So first of all, let's go on the quarterly. So I like to go out from larger time frames, and then I like to work my way in. Okay. So you could start with the yearly. Yeah, you can look at the yearly, but I'm just going to start with the quarterly for now, just for time purposes, right? So I look at the quarterly, okay, and then I see a pivot here. What am I talking about when I'm referring to pivots? When I'm referring to the tops and the bottoms of the wicks, the end of the wicks, right? Because this is where this is where supply was at, right? As it's going up, all of a sudden, when price goes up, and then all of a sudden people sell here and price goes back down, this is a supply zone, okay? So this is a supply zone, AKA resistance, okay? So what I do is I just mark it. I go to my horizontal ray tool, and I just mark it. And since this is on the quarterly time frame, I have a template. I have all these templates. Oh, I don't think I have my Q. Oh yeah, Q pivot, quarterly pivot right there. Okay. And what I do is that I have this sync tool. So it will sync to all of my charts. Okay. So quarterly pivot. That's the quarterly pivot. I can go back in time to see if there's any more quarterly pivots. No, okay, no quarterly pivots. I can go down here and mark these ones as well. I can mark this one. I will mark this one. Okay, that's another quarterly pivot. Okay, quarterly pivot. Okay, Q pivot, Q pivot. Okay, so I marked those. You guys see how I marked them. Literally, they're just the tops and the bottom of the wicks. I can mark this one, 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 and so forth. Okay, now I'm gonna go to the monthly. Okay, so this is the monthly. This is a pivot right here. Let me mark this. Okay. Monthly pivot. Actually, I'm gonna just keep the monthly pivot for now. So that's a monthly pivot. This is a monthly pivot. Okay, you guys get the gist. Okay, so this quarterly pivot right here, because someone had a question about this. So this quarterly pivot that we drew right here, right? It extended to right here. This quarterly pivot also happens to be the top of August. Okay, so this quarterly pivot, right? So this quarter, July, August, September, the top that this quarterly pivot made was in August. So that is why this is also the top on the monthly. So essentially what I'm saying is that this quarterly pivot also happens to be the monthly pivot right here. So you can write monthly pivot if you want, but I'm going to write Q pivot because the quarterly pivot obviously is in the higher time frame, and I know that it's going to be a possible bigger resistance or bigger support, right? Because it's just in a bigger time frame. The bigger the time frame, the bigger the breakout or bigger the hold. You guys know that. Okay, so I marked this, right? Q pivot. Now what do? I drill down to the weekly. And I know this makes you boring, like doing this, but this is the homework that I do with all my charts, and it helps me understand where I can take the possible price targets are and where possible support and resistance, and I can know the magnitude of, let's say if we're breaking down from a quarterly pivot, I know, oh shit, we're breaking down from a quarterly pivot, this is gonna be big. You know what I'm saying? So I'm going to now go to the weekly.
You have a question whenever you get a minute.
Yes, sir. Let me see it. How far back do you go to draw pivots? I like that question. So there's going to be some charts where, if I can, I think it was Wells Fargo. I'm going to just think of the example, but let's say, okay, so I like this. So let's say, all right. So you see how AMD right now is free falling, right? We don't really got any on the quarterly. We don't have support until this, right? On the quarterly. What I will do, and I promise you, like you're gonna find out. I think it was Neo. I'll check, but I promise you, what I'll do is I'm gonna look back in space and look back in time to see if there was possibly any pivots in this area, so I can mark, and then that could be possible resistance. I promise you guys, if you go back and like you have this much space and you just want to see if there's like a quarterly pivot in this area or whatever, a pivot in that area, you will see price react to it. I've drawn pivots like from 2018 because I'm like, damn, like there's no pivot until 2018, and it reacts to it. I promise you, you're gonna see it in the chart. I promise you. I just promise you, it reacts to it, and that's what we talk about. There's market participation occurring there. I like ask myself, I'm like, what? How is it? How is there a bounce level? Like this is a support from 2018. How is that a bounce? But it will bounce. You know what I'm saying? It will react to it somehow. So I will go back. So like, yeah, Ford is a good example. Yeah, Ford is a great example. Ford is a great example because that pivot from Ford was like in 2002 or something. I think that was like the last like pivot that you had to look back to, like because Ford is in like clear skies right now because Ford broke down of a long-term resistance from 2002, I believe, and we finally broke out. And the reason why I got in Ford, and Ford is actually one of the examples that I tell people where I was down 70%, but then we got up to be up 300% because we broke out of a long-term resistance, right? As soon as it poked its head out, I was like, oh, bet we in Ford. Just go buy time. It's going to do it, right? Now, if you was in Strat from last year, that hammer that Ford did on the yearly chart, that would have told you to been in Ford last year. But I know some people personally that are in some Ford contracts that are up 7,000% right now because they got in Ford off that hammer, off the 12-year hammer last year. Let me just show you right here. F. And let me show you the yearly chart. The 12-year. Some people got in off here. Look at that. I love strap, bro. This strap ridiculous. Imagine getting Ford 20, like imagine getting leaps for Ford because you got it on the 12-month. You were like, oh yeah, let me get some $13 leaps. And Ford is now at $25. And you got some 2022's $13 leaps. You're up 7,000%. OD. Like you're up 7,000%. And you got it, like the hammer told you everything. Hello, bye-bye, see you in a year. Literally, like, you know, crazy. The strat, like, it's really ridiculous. But that's just for, let me,
Can I add to that?
yes, sir.
Okay, so the question is, how far back do you go to draw pivots?
Mhm.
Okay, so from my perspective, and I just did this yesterday, right? Friday, yesterday. I deleted all my pivots on all my charts. Literally all of them. So the way that I started fresh, I went through all my charts and I, same as 8X, I would draw a pivot at the wick, at the end of the wick on every month,
Yep.
high and low. So you will have these special occasions like Ford, like Pfizer, like MU, that it's a 20 chart like price action in the making. And I personally, I wouldn't draw out like the quarter for those. I would just look at like where was that top 20 years ago. You know what I mean? And 8X, he likes to draw quarter pivots with a lot of the charts. I think that's genius. It's just my charting software doesn't allow that. But for most charts, like I told you yesterday, I went through every monthly pivot. I will do a quarterly pivot if I had the opportunity. So if you have the opportunity, start with a quarterly pivot at the end of the quarter. So right now we're in January. It doesn't make sense to do a quarterly pivot because the last 3 months will include January, December, and November. So
No. For the new quarter, oh, sorry to cut you off. The new quarter currently is going to be January, February, March.
Exactly. So
Yeah.
if you're right now at this very second and you're drawing quarterly pivots, it doesn't make sense to draw your most recent one because it's only attracted January. Just like if you're drawing monthly pivots, you don't include January right now because the month isn't over.
Yeah. So yes. So yeah. The pivots refer to previous. You're not drawing on the current bar. Like the pivots are previous pivot. So it's like the ones. So never on the current bar. It's the one before, right? It's the one before. But so I want to show you something on the daily. So far we've only drawn quarterly and monthly pivots, right? So look at the monthly pivot, right? So we draw monthly pivot. Look at how price is respected. So bounce off this level, right? This is where support was. Then we finally broke it down. Then we stop right here at this monthly pivot. Then we retest the monthly pivot and go back down. Wick off this monthly pivot. Let's go back in time. Wick off this monthly pivot. Let's go back in time. Wick off this monthly, wick off this monthly, wick off this monthly. Broke through, but it was former resistance right here. So you see how price gets respected by so many times? If we go back, oh no, we can't even. Okay, this is unknown territory. Okay, so that's just one small example. Let me go back. Now let me draw these. Now I'm gonna go back and draw the weekly pivot now, okay? So this was the current week. So just try to think of this bar knot here. I'm gonna draw this one right here. This is a weekly pivot. Weekly pivot. And then I can go back, weekly pivot. This is a weekly pivot. Weekly pivot. So you see, this is a weekly pivot. Look where price ended. Okay. So remember, as price is going down, I'm literally saying, hey, you guys, we're approaching the weekly pivot. Make sure to take some profits because why? Just in case we bounce. So you can see how on the daily, look how it gets respected. Weekly pivot, we retest on the daily, we retest the weekly pivot and it comes back down. And I actually remember intraday when I was like, nah, we're not gonna break through because we're retesting the weekly pivot. And then it just came right back down, right? I'm going to show you the AMD play. So, okay, so you guys see now, you guys see how now so far I have some weekly pivots and I can go back in time. I can go back all the way here. I can have this weekly pivot. You can draw as many as you want, as many price targets as you need to help you know where to possibly take price to take, you know, to take profit, as many as you need, right? Because the way I like how to approach the market, right? And remember, this is referring to my my day trades. I'm going to show you an example of a swing trade where I add in, okay? But I want to know because especially in a market like that we're in right now, okay? In the market that we're in right now, where it's like SPY just wants to SPY wants to run up in the middle, in the beginning of the day, and then all of a sudden it wants to fade. You want to be able to know, okay, when is possibly SPY going to reverse? I want to make sure I'm taking profits on my calls if I'm in some weeklies before SPY reverses to the downside, right? You want to make sure you're taking profits, and that way, and this is why I say when SPY turns red and I'm in calls and I'm profitable in calls, are like, how? And I'm like, because I take profits on the way up, not on the way down, right? And I had possible targets where I could have took profits on the way up. So now these are on my weeklies. Now I'm going to go to the daily, okay? And I'm just going to zoom into the daily so you guys can see. I have my weeklies, I have my weekly pivots, I have my quarterly pivots, weekly pivot, monthly pivot. Now I'm going to go to my daily and I'm going to replay this because this is the play that I actually took this last week. Oh, wait, hold on. Fix that out. Okay, so this is Friday. Okay, so this is Monday. Okay, so now I'm on the daily and now I still draw my pivots. Now, what do I do on my daily? These are what I denote as just price targets, okay? Price target, this can be a price target, okay? Price target, I can go back in time. Nothing there. Okay, perfect. All right, so this, if you guys remember my scenarios, this now turns into scenario 3. Why does it turn into scenario 3? Because a couple reasons. I want to show you the weekly as well. You guys are going to see how. Because in order for AMD to go 2-2 down on the week, it has to break this weekly pivot, okay? In order for AMD to go 2-2 down on the week, it has to break this weekly pivot. So what I'm going to do is I'm going to rename this weekly pivot and go 2-2 down weekly pivot, okay? 2-2 down weekly pivot. So now look at the daily. So AMD, let me go, snipping tool, copy.
Is something while you're putting that together?
Yes, sir.
Well, while the chart is approaching those levels, something that one of my mentors taught me to do, and I recommend you guys take it into consideration, is, okay, so yes, AMD is going down, right? As it's approaching the level, you have two options, right? You either let it get to the level and then you scale out. One of the things that I've learned that has benefited my trading style is you sell it at the ask, because if it hits that level and it retraces, you sell it at the bid, and before then you know it that the bid has gotten even lower. That is just another way to look at it. But yeah, continue.
Yeah, appreciate that. Let me see. Okay, so I'm just showing, oh, let me also show you the watch list as well, so y'all can see how, like, you know, how, so you can see how we do goes from the watch list, then it goes to the trigger, and then it goes to how the play actually unfolds. Okay, so let me go to the watch list. Where is it? Where is it? Okay, here we go. There's the watch. Okay. This is the watch list right here. Oh, sorry. Okay. So AMD inside day, play both sides. Bullish, it will be a 212 rev on the day over 36.39. Okay. So over 36.39, if I draw my entry for the daily puts, daily calls, because we play both sides, right? We obviously have one side that is most likely to occur because we have full time frame continuation on our side, depending if it's full time frame continuation. We have a side that we most likely, but we really are not supposed to have a bias, right? So I have both. So I have the triggers. I have AMD 137 over 136, right? And then you have the 131 puts under 131.59. Play both sides. The 212 rev on the day over 136, but the bearish information is that you have full time frame continuity to the downside. It will be a 212 down on the day under 131.59, and it will be a 22 down on the week under 125.03. 125.03, 22 down on the week. So this is where magnitude comes in. So I'm asking myself, remember, this is a Monday. So I'm saying, if AMD goes down, right, if we have full time frame continuity to the downside, right, and AMD triggers the daily entry, what is the likelihood that AMD could possibly trigger the weekly entry to go 2 down on the week? Remember, if so, this is I'm gonna take this off for a second. Actually, let's put this down. Put that down here. Okay. Oh, I can take these are all my old price targets. Crazy. And I'm gonna show you guys. Okay, so it's an inside bar. So you guys know that our inside bars, that's my favorite. We gonna get in there as soon as we see an inside bar, we in the play. Okay, so what happens? Okay, so remember now I'm going to, this will be the daily, and then because ultimately I go to the, oh no, I'll do that daily, then I'll do this at 15 minutes. Okay. Now, this is what AMD actually did. Okay. So, okay. Remember, you guys, I have this price target, monthly pivot, and then we have like monthly pivot down here. So look what happens. Okay. So AMD triggers our entry. We're in puts. We're now in the 131 puts. On the 15-minute right here, it flushes down. So as it hits your first price target, you take profit here. Now remember, because this is now a scenario 3 for me, and because we have full time frame continuity to the downside, I'm already thinking in this play that I'm gonna at least hit 2 of my price targets. So I'm already thinking that, oh, if it flushes and it hits this one, I'm not even gonna take profits there. I'm gonna wait for the second one. Why? Because I'm going into the play thinking that the magnitude can possibly go 2-2 down on the week. Why? Because we started on we took the play on Tuesday, so I have 4 days left. We have, the market was going down, semis were going down, full time frame continuity to the downside. All we need is just continue downward movement. If SPY ain't going up, if SPY has been showing that it's going to get fade every single day, if Qs are going to get faded every single day, then we know that the magnitude for this play can continue down. Because we also know that TTOs exist, we're going to understand that where can it possibly TTO but continue to go down. Okay, so right here, you can take, so on some hypothetical shit, right? You can take your first right here as it flushes, take your first, take profits here, right? Boom. Let's say you're in 10 contracts, take profits here. Boom. You're out 25%. Okay. So now you have, oh, I'm sorry, let's go 12. So boom, take profits here. Now you have 9 contracts. Okay. Your second price target, boom, take profits here. Now you possibly have, you either have 6 contracts or you have 3 contracts. Okay. When it hits your monthly pivot right here, this is where you do the 90%. And now you're out everything, but you're going to have a runner less for the rest of the week. Okay. Why are you going to have a runner the rest of the week? Because remember, as long as it does not go back above my trigger to the downside, I am not going to get out of the play. So this goes back to the question of where do you cut? But these are possible places where I can cut. Right here, invalidation / cut. Why right here? Because this was my entry. This was the bar that I triggered to go to my put entry, right? And a lot of strategists say that the bar that you use, that you triggered, below that bar, that should be your cut, or you can use that bar as your invalidation. Now, sometimes what I will do is, right, I have 3 different, ADX in terms of pivots and scaling in and out and not being faked out. I wanted your views on BAC that we took yesterday. All right, I'll go over that. It's a great question. We'll go over that. So possible, I actually have a couple invalidation cut zones. This is one where I use the wick. This is another one. Oh, sorry. This is another one where it is literally right below my entry. I like to say this, right? I like to say this term, your entry, it should be the same reason why you exit the play. I'm sorry. The reason why you enter the play should be the reason why you exit the play. Okay, so the reason why we entered the play was because it went 2 down off the inside bar, right? So this was our entry. So because price came down here, that's why we entered. If price were to go back there, that's why we would exit. So I want to say that again. The reason why you enter the play should be the reason why you exit the play. So because you entered on this trigger, you only going to exit if it comes back to the trigger. Okay. And so if you were with me in June, July, and August, I was getting pissed off back then. And the reason why is because I would have my invalidation cut literally be the entry right here. And what would happen, right, is that we would see price retest it, tap you out, and then come back down. Now, so I would be like, bro, what the fuck? Like, I hate that. Why does that do that? So I'm like, you know what? You know what you should do? Have it a little bit be above it, right? Because we know, like, I like to come into the market on a defensive, like I like to play defense, right? I like to think like, what is the market going to do to try to get me out of the play? If I know I got my entries, if I know I got my price targets, if I know I got my setup correct, and I trust my TA, as long as it hit my entry, what is the market going to do to try to get me out? It could try to TTO, it could try to do some little outside bar shit out of nowhere, you know, but like, because I believe in technicals, as long as it don't hit my invalidation cut zone, I'm going to be in the play. Okay, so you have your invalidation cut, you have your trigger to go to the put side. So what happens? AMD, you can be taking profits here, you can take profits here, you can take profits here. This is the 3 cut rule. Remember the scenario 3. So now I only have one, only have one contract, or you only have 90% of your contracts. Look what happens, guys. On the 15-minute, it retests this price target. This price target, remember, this price target right here at 131.13 was created on January 7th. It is the down wick on January 7th. So how is it that some guy on January 7th, all of a sudden pricing just react to it?
Fuck the Niners.
Huh? What are they doing? What's the score?
Bro, they just blocked the punt and ran it back for a touchdown. Scored 10-10, 4 minutes and 40 seconds left.
What's the score?
10-10, bro. 4 minutes left.
Let's go. Come on. We got it. Let's go, baby.
Get the fuck out of here. Continue your lesson.
Come on, let's go.
Wait, I'm sorry. I'm sorry, Trooper. You said the Niners were gonna lose. I'm sorry.
Nico, I can fucking bet you 3 times your salary.
Okay,
Your
I'm sorry.
job,
I'm sorry.
bro.
You're cutting off. You're cutting off, bro.
Oh, hey, what's up, Start?
All right.
Let him talk.
All right. So, I hope oh my God, the Niners win, bro. This is crazy. I'm about to go crazy. All right. Sorry. So, okay. So the daily puts, right? Notice how it retests this price target. So I'm saying to myself, all right, bet, like, it retested it, now it's going down and it continues going down. It keeps going down, AMD keeps going down. Look how it came down right at this monthly pivot. Look how it did a tweezer bottom at the monthly pivot, and it also did 2-2 rev to the upside. So this is why I say, yo, have these levels marked, because let's say you didn't have any pivots, right? You didn't have any of this. You would just see this tweezer bottom, and you wouldn't know, oh, is it going back up? Is it reversing? But see how it did something right at this pivot. Market participation. And this is why I say, yo, market participation is going to occur there. It's either going to tell you that they're going to go through, it's either going to cut, or it's either going to reverse because they don't want, that's going to be a demand zone. So as it's going down, this price target could be a possible demand zone. So you are taking profits as it touches it, because why? It could touch this and then come right back up and create a 3, right? If it doesn't, at least you took some profits. Now it goes down here, right? This could be another demand zone, because why? Because it could bounce here and then go back up. At least you took some profits at this level. Now, and let's say it continues flushing, bet, all right, cool, we in profit, woohoo, you're scaling out, so you're still in profits, right? And I'm going to talk about how you're moving your stop loss up and stuff. You're still in profits, like you're all happy. It hits your monthly pivot. Because it's a monthly pivot, you know that something can happen here and it could be possibly stronger, right? This could be a stronger bounce, right? But if we flush through the monthly pivot, then it's going to flush. So what had happened was we go down, we retest this price target, and we flush through the monthly pivot. And that's what, like, it has to hold, because this has to be a big demand. But if buyers are not here, then it's going to flush. And this is what happens. That's why it flushes right at the monthly pivot on the 15-minute. Then we continue to go down. Now we are at this monthly pivot. Let's see if this is the demand. But remember, we had taken some profits here. Every single time you had taken profits, so now there's no way you're not profitable, because you have been constantly scaling out at these price targets. And because of the fact that we know that reversal can occur, a reversal can occur here, 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 and a reversal did occur here at this monthly pivot, because it did the 2-2 rev, tweezer bottom on the 15. Okay, now this is how, when you're buying your contracts, how far out are you buying? So it depends on my trigger. So if it's a daily trigger, like if it's an inside daybreak, I'm looking like it's either a weekly. Okay, hold on. I'm gonna say two things. I really like, for beginner traders, and for those people that go to work, I highly, 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 highly do not recommend getting weeklies. And the reason why is because there's a lot of reasons. One is because if you're working, right, because of the theta, because of Greeks, as soon as the play starts going against you, you're gonna be down bad if you're in weeklies and you're not able to watch it. Okay, so those are for the individuals that are not able to watch it, their charts. Like, I really, really, really highly recommend, like, if you want to be day trading, you have to be watching the chart like all the time. If you are swinging, right? Oh, no, sorry, I'm not even going to talk about that. So what I like to say is that, like, you should be getting contracts at least 2 weeks out. Why should you be getting contracts at least 2 weeks out? Is because, one, you'll have theta in your favor. Okay, theta will be in your favor because it's a longer expiration date. Two, you'll probably have a less emotional attachment to that play, because if you see some red, you'll probably be down -10% in contrast to the person who got the weekly and is now down -30%. Okay, so you can be able to stomach that red a little more. Also, you're allowing the play to breathe if you know you have potential for it to actually go. If I'm taking, so if it's a daily trigger, I like to think of it as a day trade. And I'm getting weeklies or 2 weeks out. If it's a weekly trigger, then I like to think of the move as potentially lasting at least 2 weeks, right? Or I know the move is going to last a week, but what do? Is that I buy contracts at least 2 weeks out, just in case the first weekend wants to fuck around a little bit and the move actually happens the second week. Okay, and I'll show you examples where, like, we take triggers where it goes 3-1-2 off the week or 2-2 up on the week, and then you'll see that the move continues on to the next week. And it's like, why? And people get out the first week. I'm like, why'd you get out? And they're like, I didn't think it was gonna go up. I'm like, it went 2 up on the week. Like, so that means it's gonna take at least a week, right? At least a week for the move to materialize. And I'll give you guys those examples. So But what if you call out weekly plays because are looking at daily? Should we get monthlies? So you'll literally see. And I'll show you my MO example. When I go into the market, because I'm looking, like the first thing I'm looking for is my inside days. That's the first thing. Or actually on Sunday, I'm looking for like my inside weeks. I'm looking like monthly triggers and things like that. But when it like like Monday, Tuesday, Wednesday, Thursday, like I'm looking for like the inside days, right? So because they're inside days, I'm just playing weeklies or just 2 weeks out, right? Because the move, I think of it as the move only going to be lasting a day. That's how I think of it. And then a day or two. So you can get, so it can, that move can last a day or two, right? But now if it hit, if that day trigger triggers into, if that day trigger triggers into a weekly as well, like I'm about to show you with AMD, then the move is going to have bigger magnitude. So I'm going to show you guys, right? So it really depends on which trigger it hits. If it hits a monthly trigger, like if it goes 2 up on the month, then I'm like, oh shit, this play just went 2 up on the month. Let's get 3 months out. Let's get some leaps. Like, oh, it went to 2 and 2 up on the week. Oh shit, let's get 2 weeks out, you know? So it depends on which trigger that it hits. And because it depends on, because you'll see the magnitude that occurs with it if you're using the strat, or like, you know. Back to my AMD example, guys. So remember what I told you guys, my reason to enter is going to be the reason why I cut. Okay, so remember, I'm in 131 puts. Okay, AMD goes down, it goes down all the way to 128. It goes down to 128. We go back up and look where we reverse. Okay, look exactly where we reverse. See my price target? Never breaks. Remember, this price target, this is at 131.43. So let me go back 131.43. That's this right here, the wick that was created on January 14th. So how is it that this shit is respecting this shit from January 14th? And this is why I say, yo, the wicks matter. You are going to see market participation occur here. You're going to see either selling, buying, or yeah, vice versa. Okay, so remember, going back to when I say my reason why I enter is the reason why I exit, my price never went back to my entry. Remember, this was my entry to go down. Hold on 1 second. This was my entry right here, 131.59. Price never went back above. So because price never went back above, I'm going to stay in the play. Look what happens. We just TTO. Remember, I tell you, I'm defensive. So the market is going to try to take me out. I use technicals. So if the market, if the underlying doesn't go back above, then it's just going to TTO down. Look what happens. 15 TTO to the downside. Boom, goes down, goes down. And what's hella funny is that I was watching the market this day, it was going down. I was in the 131s and it was going down, right? And so, but I was literally saying like, man, this is Tuesday. AMD still look hella weak, bro. Like there's no way like it's gonna come back up. As long as it didn't go back and reverse on me, I was just gonna stay in the play because I know TTOs exist. I know in order for things to continue going in the direction, in order for things to go high, you got to retrace a little bit lower and go higher. In order for things to go low, you got to retrace a little bit to the upside and go lower. Okay. So what did AMD do? TTO'd, went low. It ended. This was crazy. That session on Tuesday, there were some people who got in AMD and they were like, fuck, we're down. And I was like, you're good. Like, as long as it does not, like, as long as it doesn't break up below, then you're good. AMD went right back to the monthly pivot to end the session. Okay. So now they're profitable. Look what happened the next day. So we're still in the play. I still have my runners left, right? Look what happened the next day. Gap down. Gap down. Boom. AMD. Gap down.
I don't know.
So let me show you.
That's a long ass wick.
Yep. So look now. Okay, now let me do some so you guys can see here the daily. So speed up a little bit. Boom. So 212 down. Okay. So that's how we ended that day. So we ended that day down. And I like to say, if the play went up, it's still going up. If the play went down, it's still going down. So why are you getting out? That's what I like to say, right? So because it went down, right now, it's like because if I'm looking at this, chart at the end of the day, you got full time frame continuity to the downside. You got a bearish engulfing day. What does it look like? Does it look like we're going to reverse, or does it look like we continue down? Because last time I checked, it looked like the bears were here, right? So we didn't. It never came back and retested our entry. So now, boom, we're going to go back down. So the next day, this is very important. This is very important. So remember, this is our monthly pivot. And this is why I say this shit is so important, yo. So like, this is our monthly pivot. Our monthly pivot is at 128.08. Okay, on the month, we drew that on the monthly. Look what happens on Wednesday, you guys. AMD tries to do some fake ass bullshit, and I was like, I don't give a fuck what you're doing. This is just gonna be another TTO. It went down. Okay, so we opened up pretty in the green. Hold on 1 second. 1 second. 1 second. And this is why, like, and I'll tell you guys, like, yo, I'm a hold, like, because it's still going down. So, so hold on.
20 minutes అయిపోయింది.
Okay, so I had a one-on-one with someone, and they mentioned how like they're not able to really get like plays over 100%. And I said like the reason why in Addicts Trades, like like all of our, not all, sorry, I don't want to say all, but the reason why like I aim for 100% at minimum for my plays, that's what I aim for, is because I'm looking for the plays that could potentially give me 100%. Okay, so my homework is like looking at the ones that can trigger into a trigger and it can give me that type of magnitude. Okay, so AMD, when I looked at AMD, I was like, not only are you going to give me the inside day break, you're going to trigger the 2-2 down on the week. And all I need to see is where you TTO to show me if that's going to possibly happen. And until you go back up to my daily pivot, which is at 131.59, I will not get out of this play. Okay, because remember, it was on Tuesday. And I know we still have 3 days left, okay? So AMD from yesterday, we woke up Wednesday, AMD from yesterday, now 138%, okay? Why? Because it gapped down. And this is why I said still holding AMD, okay? Now, gap down, look what happens. Gap down and look what happens. We start going back up. So people start freaking out. Not people, I'm just saying like you can start freaking out. Like, oh shit, are we gonna go back up? Look what the fuck it slaps into. The monthly pivot that we drew on the monthly time frame. So this is what I'm saying. We had drawn all our pivots out. Remember, if you guys have been in me from the beginning, we drew all our pivots out, and now we're going to see how the play developed, right? Notice how it respects all of these lines that we created. We TTO right off the monthly pivot. And so we know that this demand zone that we broke through now is now a supply zone. Okay, and now this is or in other words, this former support zone that we finally flushed through. Oh shit, hold on 1 second. Actually, right quick. So this former support zone that we flushed through is now the resistance, and it goes back down. Okay, and look what happens. Now, this is where shit gets interesting. Remember how I tell you these triggers, man, like they do something. Look what we run into. Our little friend 2-2 down on the week. Mind you, we're still in the play, right? Let me show you something. Where's it at? Where was my S1? Weekly pivot, AMD breaking down, S1, AMD, 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 AMD. Are you still? Yeah, I will answer that. Okay, here is a picture. This is the picture. And so I alerted this right when it flushed through the 2-2 down on the week. Okay. So right here, this picture right here, you guys can see this in ADX alerts. This picture is referring to the flush that occurred right here.
And
This
Niners
two-
are so just respect my privacy and let me cry in peace, right?
Niners are what?
So you guys enjoy your night. Yeah.
Wait, what's the score?
10, 4 seconds left. Niners are 20 yards away from a field goal.
Wait, hold on. What's
It's a 10-10 with about 13 seconds left. The Niners about to kick a field goal.
Oh my God. Oh my God. Oh my God, dude, it's crazy. No. All right, I can't. Nope.
Sorry, where's Trooper?
Oh,
is he still here?
wait, nah, bro.
Wait, Adex,
Yeah, what's
Adex,
up? What's up?
Adex, you're a Niners fan?
Hell the fuck yeah.
Oh, that's awesome. Good for
Fuck
you.
yeah. Talking about fuck yeah. No.
But the Bucks will beat him next level. Oh, I'm sorry.
Bro, I can't believe, bro. I feel sorry for Aaron Rodgers. He can't get past the Niners.
Nope.
Like he can't. Like that's his like kryptonite, dude. Like he really can never get past the Niners. Sucks. Okay, so back to AMD, right? The reason why, like, yeah, so AMD, see, when I talk about like a trigger into another trigger, right? So that inside bar trigger on that daily that happened on Tuesday, it went down and went down and went down. And now, let me take this off right here. Remember, this is our 2-2 down on the week. Oh, here, this is what I'll do. Okay, so in order for AMD to go 2-2 down on the week, it has to break this pivot. Okay, this is the pivot. Now look, so this is referring to the same one right here. Now look what happens as we approach this pivot. Look what happens. This is why I say something will happen here. There's always something that's going to occur when we are approaching these pivots. Remember, this is now the 2-2 down for the week. Look what happens. Play. Ah, that's a daily. Do it. 15. So I'm gonna play it on the daily first, and then I'm gonna play it on the 15 first. The daily play. Boom. So you see, we flushed through the 2-2 down on the week. And now, and so remember, on the daily, our entry was right here at 131. And you have a runner now that is still going all the way down. That is now at 102, that is now at 121. And this is how, when I talk about magnitude and like, no, I expect like 100% is because like there's going to be and this is why when I say your runner's gonna make your money, right? Remember, I was only going to cut if AMD went back above my trigger to go down. AMD never went down, never went back above. So there's no reason to cut it. You know, I mean, obviously you got to have like, depending on the grease, if you're like a Friday 0 DTE, then obviously that's different. But like, as if you don't, I like technicals. If it ain't going to hit my technical level to cut, then why would I cut? You know what I'm saying? Because it's still going to go down. That's how I like to think. And also for the upside, if it breaks to the upside, right, it breaks your daily trigger to the upside and it retests your daily trigger to go back up, that is literally the retest of the breakout. You guys know when you break out and retest a breakout then go back up, that's literally the retest. That's literally what's occurring. It's just the retest of the breakout. That breakout was at that daily trigger. And then it goes up. If it comes back down, then you cut. Then you hit your invalidation and then you cut the play. But if it doesn't, if it's just going to retest, then why are you getting faked out when it's still going to go down for the whole week? You know? And so look at what it does. It flushed. So this is why I was like, this is why AMD was one of, I was like, dude, that's going to be crazy if it does a 2-1-2 down in a week, which triggers a 2-2 week, you know? And that's like you compiling triggers. So when it comes to my watch list, right, the ones that are like placed on top and the ones that I say main focus, I'm looking at the ones that could trigger into another trigger, right? What daily entry could trigger into my weekly entry? What weekly entry could possibly trigger into a monthly entry, right? Oh shit, the weekly trigger is just 30 cents away from the daily trigger. Man, what's the likelihood that we could just trigger that? It's only 30 cents away, right? That's what you want to think. If you got triggers that are stacked upon each other, then you're like, this daily trigger can trigger into that, and then boom. Then magnitude on top of magnitude on top of magnitude. Because you know, if we go 2-2 up on the week, like if a 2-2 up on the day can trigger into the 3-1-2 up on the week, it's like, baby. You know what I'm saying? Like, give that to me type shit. And I'm going to show you the MO play that was like, I was like, I can't wait for this to trigger into this. And then it did exactly what we expected it to do. Okay. So AMD is just one of the examples where like you see how it respects these price targets and it respects these pivots. It respected the monthly pivot right here. Then it respected, oh yeah, so this is where it flushed. Okay. So it flushed the 2-2 down on the week, still going down. We gap down even more. It gaps down going into, I think this is Friday now. Yep, Friday. The gaps down into Friday. Now, look what happens. This is why it's so interesting. We gap, so this is Friday. We go down, and then we start going up. Look where AMD retests. It retests our the 2-2 down weekly pivot. So now we got the retest of the weekly trigger, and then we go back down. And then AMD just continues to fall, goes back down, breaks the quarterly pivot. Now it's like, oh shit, like, you know, we just broke the quarterly pivot. This shit is just done. And then it just keeps going down, And that is how, let me see. And that is how you guys can get plays on weeklies to be over 400%. Okay, by holding, remember, I like to say, yo, if it hits my trigger on a Monday or Tuesday, what's the likelihood that it could keep going down? We had full time frame continuity to the downside the whole entire time. And that just came because remember, it triggered on Tuesday, 2 down, 2 down, 2 down. Never gave us any sign that it was going back up. And that is how you milk your plays. We want to milk, like, you know, I want you guys to milk your plays as long, you know, if the strat doesn't give me a 2-2 ref to the upside, I'm not getting out. The strat has to tell me to get out in order for me to get out. Because I know TTOs exist, I like looking at this AMD play on the 15 is beautiful. Because look what happens if you guys go back down. It just TTO'd just down. All it did was just do this. Hit the trigger. Hit the trigger. TTO. Down. TTO. Down. TTO. Down. And look at where it TTOs. TTOs off the price target, TTOs off the monthly pivot, TTOs off the weekly pivot, and then keeps going down. So that's what I'm saying, like, yo, so back to the 4 charts, that is why we go back and we drill down on this monthlies. on the quarterlies. Remember, so this is why all these mean something. This means something, 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 because these are potential areas where I can take that it's going to be market participation, where I can take potential price targets, right? And remember, it's approaching. You should always think about it as like, because I'm defensive, I like to take my profits as it's approaching those levels, because just in case it wants to bounce now and then reverse. So as it's approaching those levels, you're taking your price targets because you're going to be approaching it in strength, right? Any questions so far with this AMD example? Let me see the chat. Okay, thanks for giving up again. Oh yeah, of course, bro. Of course. Man, I'm trying to, everybody trying to win, man. That's the whole point, you guys. That's the whole point. So long as I'm providing value, dude, I just hope you guys, this helps. On Sundays, you look for weeklies inside. Explain again. Yeah, of course. And also tomorrow we're gonna have a Sunday night watch list, so make sure you tune out for that, and so you can see exactly what I'm referring to. Of course. So this is the AMD example. This is just an example of where you can stay in the play and how it respects these levels. I'm going to show you guys my MO example, because the MO example is an example where we actually scaled into, where we added into. I personally, I do not, it's going to be 9 p.m. Eastern tomorrow, 9 p.m. Eastern, the Sunday night watch list. I personally, when it comes to weeklies, I don't like scaling into weeklies because of the fact that they're weeklies. You know what I'm saying? Like, as soon as I see red, it's like, Brad, my shit gonna be down 10%, 15%. So it's like, I don't like that. If I have 2 weeks out, if I have a month out, I like scaling into those because I have more time. And I'm usually thinking that play is like, oh, I know this magnitude of this play is going to like last a long time. So I can have possible areas where I can scale in. So let me go back to I'm going to go back to our MO example, because the MO play was one of the plays that we took. Perfect. Let me see there. So you draw a D call on the 15-minute time frame and not the daily? No. So I draw daily call on the daily time frame. So for MO. So like, I'll draw it on the daily right here. So like, let's say, so this will be for tomorrow, this will be my call entry, and then this will be my put entry, right? Put entry, daily puts, okay? And then if I go to the 15-minute time frame, then now I get to see exactly, right? So you'll see every morning I live stream, and I have like the charts up, and this is how it will look like. So we're just waiting. As soon as market opens, we're just waiting. Price is just going to fluctuate. Price is just going to fluctuate. Price is going to fluctuate. Then let's say it starts approaching the daily puts, right? Then I'm like, all right, you guys, we're approaching the daily pivot. We're approaching the daily put pivot. We're approaching the daily put pivot. Then it goes down. Then we're all right. We're in puts. We're in the 50 puts. We're in the 50 puts. It starts going down. It starts going down. And it's like, all right, we're in profits. All right, start taking profits here. This is how it is. For the upside, market opens, prices fluctuating. Let's just think that this is a inside day, right? So this is an inside day breakout. We're just waiting to see if it's going to go up or to go down. So this is an inside day, or previous day was an inside day. So now we're just waiting. We're like, all right, guys, MO, it looks like it's going to hit our call triggers. Boom. All right, we're in 51 calls. And now we're in. All right. Start scaling out. All right, it looks like it hit our weekly pivot. All right, make sure you're taking profits. Boom, it starts reversing. Now at least we took some profits here. Right. That's how our inside day breakout. So for Imani, who asked daily call, I do it on the daily, but then I drill down to the 15 and I see what the 15-minute is showing me. I like to look at the 15-minute time frame intraday. I don't like looking at the 5, because I believe the 5-minute has a lot of fake outs. 15-minute gives you a clearer picture. Yeah, so You know, I can see there's been many times where I get faked out on the 5 where I think like, oh shit, it's reversing. And then I look at the 15, I'm like, oh fuck, I didn't look at the 15. There's no reversal on the 15. Why did I get out? You know what I'm saying? So I like to look at the 15 is like the least that I'm looking at for my day trades. Okay, so I'm gonna go back to MO because MO is a play that went crazy for us. We're still in the MO. We're up like 200, 300%, depending if you had added in or not added in. And the reason why is because of the double inside break that went crazy for us on the weekly. So MO, this was the one. So we had gotten in MO, and let me or actually, let me mark out the levels first before, okay? So let me mark out these levels. This out, this out. So, because the play already happened, so you guys gotta just pretend like it didn't happen yet. So I'm going to pretend on this monthly, I'm gonna pretend like this bar isn't here. So I'm just gonna remember, you gotta mark the previous bars. So on this wick, this is the wick right here, that's monthly. So I'm gonna mark this wick, monthly pivot. Okay, this is another one right here, monthly pivot. Okay. Oh, actually, sorry, I didn't go to the quarterly yet. Sorry. Okay, so the top of, so this monthly pivot right here on October happens to be the top of that quarterly pivot for October. So really, I'm going to go right here and actually change this to quarterly pivot. I hope that makes sense, okay? So the reason why this is the quarterly pivot is because October 1st wick happens to be this one right here on the quarterly. The top of it, okay, the top of this wick is, the high is at $49. The high of October is $49, okay? So you're marking these pivots, okay? Now I can mark, oh, sorry, I should go to the quarterly first. Quarterly. This is the quarterly time frame. That's a quarterly pivot as well. Q pivot. This is a quarterly pivot. Q pivot. And then it's another Q pivot. Okay. Q pivot. All right. So I've marked my quarterly pivots, right? And you remember, you can also do this to the downside as well. I want you guys to do it to both sides, upside and the downside, just so you can know possible areas of bounces. Okay. So that's the quarterly. Now we're going to drill down and go to the monthly. Okay. Now we're at the monthly. Okay. So this quarterly pivot happens to be the top of this one right here, which is September. There's a weekly, this is a monthly pivot right here, monthly pivot. So I'm going to draw a monthly pivot right here. Okay. And then draw another one right here. You can draw as many as you want to just get a clear picture. Monthly pivot. Okay. I think I'm good with those. Okay. Good with the monthlies. Now you can go to the quarterly, you can go to the weeklies. Okay. So this play actually we played. Okay. So this is important. This is what the image looked like before we had gotten in. I want y'all to like, I hear I can screenshot it or whatever, but this is what the image looked like before we got in, okay? So we got a double inside week, and we got a monthly pivot right here. We got a quarterly pivot right here. Got a monthly pivot right here, quarterly pivot right here, monthly pivot. We got hella pivots, right? Like that's above. So I'm like asking myself, like, damn, what is the magnitude that we could possibly take this out? Let me go back on the monthly, because before that inside, yeah. So this month right here, remember, I want you guys, because the play already happened. So just like pretend like this bar is not here. So we hadn't gotten 2 up on the week yet. I mean 2 up on the month. We didn't go 2 up on the month. So I'm going to, just so you guys can see it. So this month, this is our entry to go 2 up on the month. So I'm gonna change this to 2 up month, 2 up on the month, 2 up month pivot. Okay. This is our entry. Remember, pretend this bar is not here. This is our entry to go 2 up on the quarter. Okay. Oh wait, was it 2-2 up or inside? Yep, 2-2 up on the quarter. So I'm going to change this Q pivot into 2-2 Q pivot. 2-2 up Q pivot. Okay. Now, look at this. On the weekly, we have, this is why this is crazy. So you have a double inside week, right? So remember, y'all know inside bars mean consolidation into expansion. The reason why we get such good contracts is because we are literally picking contracts that are cheaper, right? That's why we take these inside weeks or inside bars, because they're literally cheaper in price. That's how we get our magnitude. So we take these inside weeks, right? So you have one for an inside day, you got 1 day of consolidation expansion. You guys know for a double inside day, that means even a bigger type of move because it was 2 days of consolidation. I like to think of this as inside days are like tug of war, right? You have a tug of war, and then all of a sudden that friction leads to boom, like an explosion of one side winning. If you have 2 days worth of tug of war and 2 days worth of friction, I know that they're gonna get tired, but don't think of it like that. But like if you have 2 days worth of friction, that's gonna lead to probably a bigger explosive move. One of the someone that I did a one-on-one with, he said he likes to think of it as like pinching, I forgot how he said, pinching a bean or something, like pinching and then it popping. So that's how he likes to think of inside days. I was like, yeah, that makes sense to me. So I understand, right? So think of this. So think of this, right? We have two on an inside day. Double inside day means like a bigger breakout compared in contrast to a regular just inside day. Inside week means a bigger breakout in contrast to an inside day because it's on the weekly time frame, right? The bigger the time frame, the bigger the move. Now, a double inside week on the weekly in contrast to a double inside day, think about that. That's going to be even a bigger breakout than just a regular inside week. Because it's a double inside week, this breakout can be bigger depending on which side it wants to break out to. So now let me give you the confluences that we got on our side. And I'm going to show you the watch list so you guys can see, oh, this is what he was thinking about when he got into the play. Right here. Okay. This is what the watch list was. Okay. Double inside week, watch XLP because MO is part of consumer staples. I like the upside, but play both sides. The bullish side is full time frame continuity to the upside. You have a hammer on the day. I'll show you the hammer on the day in a second. You had a 322 rev on the day over 47.44. You had a 2112 up on the week above 47.62. So mark that. Weekly calls, our weekly entry, right? And then you have a weekly pivot right here. Weekly pivot, okay. Okay, so 2112 up on the week over 47.62, and then it will go 22 up on the month over 48.84. It will go a 122 rev on the quarter over $49. So look at this. 22 up on the month over 48.84, and then 122 rev on the quarter over $49. This is only 16 cents away from each other. 16 cents, or I'm sorry. Yeah, no, 16 cents away from each other. Yeah, it's only 16 cents from each other. So look at this, right? So look how close these pivots are. So you're asking yourself, what is the likelihood that we can go, that we trigger the 22 up on the month that could trigger the 122 up on the quarter? This was a 122 up. 122 up on the quarter. What is the likelihood that we can do that? So what is the like? So ultimately, you're asking yourself, what is the likelihood that this inside break can trigger this 22 up on the month and this 122 up on the quarter? You have full time frame continuity to the upside. You got XLP going crazy, right? If you know it could, because I know it can do it, now that is why I'm saying possible swing play. As long as we hold, so this is where everything comes into like to make sense. Remember, if it hits my weekly trigger, I'm getting calls at least 2 weeks out. So that is why I said possible swing play over 47.62, because 47.62 is my weekly trigger. If we hold 47.62, that tells me to get calls at least 2 weeks out. I'm gonna show you something so far. So you guys see the watch list. That's the watch list for you guys. And mind you, and I'm gonna say, this is what I'm saying. That MO play 50 call. There's some people who say like, oh, but like I can't buy contracts too far out because they're expensive, right? 50 call 121.22 is at 7 cents. So when I say like, yo, we aim for 1,000%, imagine you getting a contract that was 7 cents and it went 1,000%. You could have loaded on this. You could have bought 100 cons, 200 cons, 300 cons, 400 cons, you know what I'm saying? Depending on your account size. But this is what I'm talking about. Yo, there's some plays where it's like, it's a 6 cent play and it's going to go to $6. Okay, you know what I mean. Not actually, but you know what I'm saying? Like, and this was what it was, 7 cents. Possible swing play. Okay, but I took the 48 calls, 48 calls to 121.22s, and I also took the 50 calls 218s, right? And the reason why is because I said I like MO swings once we hold the weekly call trigger. Remember, because if we hold the weekly call trigger, that tells me I'm okay to get calls at least 2 weeks out, as long as everything else is in my favor. As long as we're still full time frame continuity to the upside, XLP is still going up, things like that, right? Then I know, and obviously I'm looking at the open interest as well. The open interest was high as well. So I'm like, yeah, people are here, they want it, okay? So as long as we hold the weekly trigger, then MO is gonna go up. And I'm gonna show you, so I'm gonna take this off, and I'm gonna show you exactly what happened on the day. Okay. I'm not gonna show you right here. Okay, so this was on, so we created the watch list on Sunday, right? This is a weekly trigger. So on Sunday, and I was like, we're getting ready. I was like, dude, as soon as MO does it, I'm in there, right? So the next day, replay. Okay, so the next day, you guys, on Monday, MO gapped down. So MO gapped down, but then it created a hammer. So I was like, oh shit. So you know what's crazy about MO is that I could have got an earlier entry. I could have got this entry right here on the day, because this is my daily trigger. Right? This is my daily trigger. Here, 2 up on the week. Oh, so let me go. This is my 1. This is my 2, 1, 1, 2 up. 1, 2 up week calls. Okay. So I just started doing this, drawing what the actual thing is, because it lets me know what the play was, right? So this daily call will trigger the 2-1-1-2 up, right? Which is the double inside week break. And then we can go to the weekly pivot, then we can go here, okay? So on the daily, oh, also, MO had a gap fill. And you know what's crazy? I didn't know that MO had a gap fill until one of the members told me that it had a gap fill. And I was like, damn, that's just another reason why we should have entered the play. Like MO gave us literally 10 reasons why it was said, buy me, buy me, buy me, buy me, right? So that's the gap fill. Gap, okay? So look at all this shit, bro. And this is where the watch list comes back. And so this is where my watch list comes back, right? When I say, because I'm going to read it, how you can read this. Okay, so double inside week, we got that on the weekly time frame. Okay, double inside week. Bullish, full time frame continuity to the upside, check. Hammer on the day, check. 322 rev on the day over 47.44. 322 up, right? Over 47.44. 2112 up on the week over 47.62, right there. Boom, check. 22 up on the month over 48.84. 22 48.84. Boom, check right there. 122 rev on the quarter over $49. 122 up on the quarter over $49. Okay. Now let me show you exactly what MO does. We're going to take it slow. Okay. Okay. Boom. First day. MO triggers the daily into the weekly, into the gap fill, and more some. So if you got an MO, you was already up 100% the first day. No, I don't think it was 100. Was it 100%? I don't know if it was the first set, but just like that, the next day, boom, out of there. Why? Because you got three things telling you that, like, yo, if it hits triggers that, it could trigger that, it could trigger that, and then boom. Okay, so that's the first day. Watch what happens. Boom. Second day. Now, everyone was going crazy about MO, like, whoa, MO. And I was like, bro, to be honest, I did not expect this to happen that quick. Like, you know, I thought it was going to take a week for this shit to happen, but it happened in 2 days. Remember, I wanted it to trigger into each trigger, and look what it did. It triggered the daily, triggered into the weekly, into the gap fill, and then we triggered the 2 up on the month, and then the 2 up, and then the 1, 2, 2 up on the quarter in 2 days. It triggered that. And so we were like, it was crazy. Let me see. When's 1-4? 1-4. Okay. So look here. So on the 4th, which was this day, right? MO over 100%. We were up over 100%, and we were on 1-4. Mind you, we got MO 48C 121.22. We had 17 days left on our contract. 17 days left, and we was already up 100%, and it was going up. And this is what I'm talking about, like magnitude. Like, you can be in a. This is what I'm saying. Like, for my swings, I want 1,000% because I expect to be up 100% within the first couple of days, and it's going to go up. You know what I'm saying? And that's why I said see you at $49 because I knew we're still going to go up. Mind you, MO right at the monthly pivot, by the way, take profit here and leave some left for the quarterly pivot at $49, right? So I'm saying because we approach the monthly pivot, take some profits. We're approaching in strength, but leave some left for the quarterly pivot. Because why? We have 3 weeks left. What is the probability that we can go 16 cents and take out the quarterly pivot? We actually ended up taking it out that same day, okay? So that is how, this is just one of the examples how, like, when we talk about, yo, if you have time, you can be up 200, 300, 400, 500, 600, 2,000% type shit, right? This is how, because you get in with, like, the technical saying, you can possibly do a 2-2 up on the day into a 3-1-2 up on the week into a 1-2-2 up on the month. What? You know what I'm saying? And that's the type of plays that you start salivating at if you see those type of setups. And that's why I was like, as soon as I saw this, I was like, yeah, man, this is going to trigger all of it. And then, so let me tell you where you could have added. You could have added when it went. So if I remember, I got in late. I got in on the 2-1-2 up on the week. I didn't even take the hammer break. I didn't even take my own break, right? I waited for it to do that, and then I got in. So if you had gotten on the hammer, you could have added in when it went 2-1-2 up on the week. Then you could add in when it goes 2-2 up on the month. So the person who was talking about scaling in, this is how I scale in. I scale into the plays that I have time in, where I know that they can TTO for 3-4 days and I won't be tripping because I still have hella time left. Okay. So that is where I scale in. But for my daily triggers, I'm not really scaling into those. I mean, for my day trades, because it's weeklies, right? So hold on, I got a couple messages. Thank you. Do you check on futures or the corresponding ETF after you enter the play? I check on futures and the corresponding ETF before I Heat Nation, before I enter the play. So, like for example, on Sunday night, I'm looking at what the sector is telling me, right? What the sector is possibly going to do for the next day. Can you explain to me about CAG? Yes, that's insane. Addicts said I missed MO. Oh, thank you. Appreciate it. So the MO on the day, right? We hit everything. Now look what happens. Now we have an inside day. Okay. So MO gives us an inside day. And what the cool thing about this is that we have an inside day. We are up over 80% on both of our contracts. What can we do? Right? When we talk about adding in, so you should be asking yourself, like, we now have an inside day over the quarterly pivot, and we still have another monthly pivot right here. What is the probability that we go 2 up on this and then go up, right? If you go 2 up on this, this is an inside bar on the daily. So if you go 2 up on this, you can add in on this 2 up and go up, right? So I think, I don't even think it went 2 up actually. Let me see. Oh, it did. So it went 2 up. So you could have added in here. So now at this point, you could have added in like 2 times already, okay? So inside bar breakout, add in. It's still going up. Remember, I told you guys, it's still going up. And I said, see you at $49. This is what I'm talking about. Like I wanted $49, but then it said, no, we're going to give you 52. And I was like, okay, that's fine. You know what I'm saying? So that happens. 1 second. When did I say add into MO? Add into MO. I want to show you something where you could add in. Okay, all right, cool. Okay, so remember, right? We already went 1, 2, 2 up on the quarter. We're going up. ML just going up. Full time frame continuity to the upside. We're just going up at this point. Okay, so I'm going to continue playing, and look what happens. Red day. Okay, we finally have a red day. But are we tripping? No, because let me see why. Oh, right there. Okay. Oh, snipping tool. Blah, blah, blah. So on the, oh no, this is on the 4th. Okay, so that don't count. But I had said that take off majority of the position because MO needs a red day soon, but MO did not give us a red day until like 3 days later. So right here, right, it gave us a red day on the monthly pivot. And let me tell you exactly what happens. I'm gonna keep playing. Boom. All right, there it is. That's the picture I wanted right here. So if you had remembered, I had talked about, MO is hammering today. If MO completes his hammering and wants to go 2 up tomorrow, add more, right? And so I had said, because where we had hammered was right off the quarterly pivot. And this is when Heat Nation, going back to your question, do you look at the ETF? So in this example, what I did on the 12th, right? This was on the 12th. I said, I'm going to add more on MO218 contracts with a 2-up break off this hammer tomorrow. Why did I think that it was going to do a 2-up break? Because a couple of reasons. It was a hammer. It was a hammer off the quarterly pivot right here and off the monthly pivot. So now these places where it was a former resistance are now support, are now being held as support. And I'll only know if it's true if we actually go 2-up entry. Okay. So I'll add more MO218 contracts with the break of the 2-up hammer tomorrow. I look at the MO and I look at XOP side by side because I see that XOP has a green hammer and we're hammering off the broadening formation. So I'm like, if XOP wants to go 2-up tomorrow, then MO for sure is going to go 2-up tomorrow. And then look what happens. Boom. Add more. So at this point, you have now scaled into MO about 4 different times. And it's still going up. And you just keep going up, keep going up. And then now look where we finally start having some form of rejection at the monthly and the quarterly pivot. That's why I say as you approach, take profits. Okay. Then I think it gives it a 3. Yeah, it gives it a 3. And that's how we end. So this is what it is right now, the 21st. So MO, we closed out the 48 calls on Friday for 400 something percent. We're still in the 50 calls for 218. We're up 285%, I believe, if you did not scale in. If you scaled in, obviously your percentage is not that. But yeah, so this is just an example to answer those questions that like why I draw my price targets and how to scale out. I'm going to have the PowerPoint. This was recorded, so I'm going to give this to you guys and to the premium members as well, so you guys can go over this. And I'm going to have the PowerPoint available so you guys can look at the scenarios again. Remember, actually, let me just bring it back up so you guys can see. Because I know I've been going for a long time. I apologize, but I've been taking you guys a long time. I know East Coast, these are almost midnight. Let me just go back to the scenarios for you guys. Do you check the option flow before entering your play? So you know it's interesting, bro. So I highly recommend doing everything and anything to have more confidence in your position. I do the most. Like I want to see what the chart is setting up. Like I want to see the chart. I want to see what the flow is. I want to see the open interest. I want to see the volume. I just want to, what is the news, right? Like do the most. What's crazy though is that because of the fact like I've just been busy, I haven't been able to look at the flow as much as I would like to. But because of the strat has still been making me profitable because I just take the strat, you know, strat tells me it's going there, right? So, and that's why that's why like when Rob is like, bro, we don't need flow, like, because it's like price action is literally happening in front of our eyes. So you can use the flow as an added confluence, and I suggest doing it because if you like use our trading ticks and like you use like the algo flow, it will actually help you. Like if the algo flow is bearish, then I'm going to say, okay, algo flow bearish, let me see why, and then I'm gonna see if the strat is telling me a possible bearish like, you know, position or something like that. So, but I do recommend if you can look at option flow. I just don't look at option flow right before entering the play. I do not. I just take my triggers, and triggers, like there's a guy on Twitter, I forgot what he said, but he's like, it's crazy how profitable you can be just by having support and resistance levels. Like, because all of my pivots are essentially support and resistance level. If it breaks that resistance, it goes to the next one. If it breaks that one, it goes to the next one. If it taps the resistance and is like showing consolidation, all right, and it doesn't want to break it yet, then I get out. You know what I'm saying? But yeah, it's essentially just like support and resistance. You can just see like it just goes from this level to this level to this level to this level. It doesn't break that level, it goes back, you know. Just hopping around. Answer that question. Let me just show you. This is the last thing I'm going to show you guys. Let me share. Scaling out. So like I said again, so for scenario one, this is usually for my day trades, right? This is usually where I will be out 50% of the position on my first price target. So like on this MO trade, well, MO doesn't really count because the magnitude was saying it's gonna go crazy. But for the MO trade, out 50% for the first price target, second price target, I'm out 100%, right? This is for the 2 leg where I know that it's gonna go 2 legs. For scenario two, I'm sorry. No. Yeah, the scenario one is the 2 legs. Scenario two is where I see like the gap fill play or the one that can trigger into another trigger, right? The first price target, I'm out 50%. The second, and let's say if I have 12 contracts, first price target, I'm out 50%. So now I only have 6 contracts. The second price target, I'm out another 50%. So now I have 3 contracts. The third price target, I'm out 90%. So now I only have a couple runners or 1 runner. And then I just see what that 1 runner wants to take me. And my break even, my stop loss, just like I showed you with my examples with AMD, I like using the technicals to tell me what my stop loss is. It's gonna be, it's gonna be like if I'm taking a daily put trigger, then it's gonna be a little bit right above my daily put trigger, right? Just like with that AMD example. For scenario 3, this is what I like to consider the early in the week scenario, where it's like, man, we're on a Monday and it's full time frame continuity to the downside, it's gonna go all week type shit. Or if it doesn't go all week, like let me see if it wants to gap down. Like these are the potential 2-day plays, right? Like if it keeps going, if it goes 2 down on a Monday for the week, it's probably gonna continue going down for the rest of the week, you know. And so I'll be out 25% of the play during the first leg. Then because I'm more confident that there's going to be 2 legs, then I'm out majority of the position during the second leg. And then I'm out 90% of the position if it gives me a third price target. Remember, scenario 3s are the early in the week scenarios, and to the longer term type of plays where it's like, oh yeah, this one got magnitude. Okay. I didn't do a scaling in slide where I typed something out. I just wanted to show you, like, you know, the MO example of the scaling in slide. I will write something out. This was just like, you know, because I just didn't want to take you guys' too much time. But yeah, so this is just, yeah, so this is a scaling out example, but I will have a better and like, you know, a more comprehensive like one as well that talks about scaling in. Is there any other questions that I can answer for you guys? I hope this helped out a little bit. I hope you guys understand what I mean by the wicks and what I mean by the price target. Really, all I wanted y'all to get out of this, if anything, is why I draw these pivots, why I draw it on a quarterly, why I draw it on a monthly, why I draw it on a weekly, and understand how price respects it somehow, some way. And you can go back in time and draw, like, see, you can go back in time, like, right here, if there was no space right here, like let's say I was looking at this wick and I needed like a resistance, I can go back and go back and be like, oh, okay, here it is. And then I can just mark, oh wait, you can't see, sorry, because you guys are looking at this one. Let me show you this one. Okay, so what I was saying is that example, like, oh, if let's say this is where I need to find possible resistance support, but there's nothing to the left. You see how there's nothing to the left? So what I can do is I can just go back, and I'm like, oh, okay, there you are. And then I mark this. Okay, now I got something. Boom, now I got a possible price target here. PT, see? And how I got this price target, I just went back and I found it right here. And you can do that for this, you can do that for this, you can do that for this. You can literally, if you want, you can just mark all these, mark. Like boom, 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 like all of them, you know what I'm saying? But I do not want to do that. But yeah, I hope you, let me see if there's any more questions. Do you use scanner for plays to narrow the best play? I use RunStrat, I use Inside Day Scanner. I like just looking at people's watch lists on YouTube and like Twitter. But really, RunStrat is like my go-to. I just like, all right, where are the inside days? Where are the inside weeks? And then I like look at the entirety of the play, right? So I start off with my insides because I know I'm going to take an inside trigger. But if I see like a 2-2, like some of my watch lists, it'll be like, I think Costco. was it Costco on Friday? I had a 2 plays that like I entered, but the reason why like it was gonna be a 2-2 down trigger, but the reason why I liked it because it was still falling. Like I was like, yeah, it's still gonna still go down. Like you can still take it, right? But I really like those inside days because it like we go from consolidation to expansion. Any other questions? I think that's all questions in the Zoom chat. Let me see on the Discord. Discord. Can you do a quick what we talked about before we get into the review? Oh, okay. No, we recorded it. Still going on. All right, that's all. There are no more questions. All right. Thank you guys for besides inside days, what criteria do you scan for? Sector strength, definitely. Which sectors are going to pop off that month, that week, that day? If we're about to go to if XLE is about to go 2 up on the month, which it did this month, and when it went crazy, let me just show you guys an example real quick. XLE, this is not part of the example. This is not a part of. I'm gonna end it with this because it's not part of the presentation. But when I talk about sector strength, this is what I mean. So, okay, so XLE, as soon as it went 2-2 up on the month, that should have been my trigger to go long in all energy stocks. Soon as XLE went 2-2 up on this month. Why? Because just like when Heat Nation was talking about, do I look at the ETF before? I like to look at it before, and this whole like the market was red and shit, bullshit. Market was not red. I mean, the market was red, but like not on some like you couldn't make money. First of all, you can make money off puts, and second of all, if you had played energy to the upside, you was eating the whole entire time. Okay, so this is XLE energy. Okay, and this goes into the like I'm using the sector strength to see where I'm going to get into play. If you had played any energy stock this month, you would have made a lot of money. Okay, let me just give you guys an example. So this is XLE on the month, right? This is the ETF XLE. ZOM, ExxonMobil, look at it on the month. That's the month. Okay, green month. Doesn't look like a red market to me, according to that. Chevron, that's the month. That doesn't look like a red market to me. EOG Resources, which is another energy company, or in the energy ETF, doesn't look like a red month to me. You got Schlumberger. That don't look like a red month to me. Valero, VLO. That don't look like a red month. Yeah, it has been going down, but it was up here before this whole correction that occurred the last couple of days in the market. This was a green month, DVN, Devon Energy, DVN, also green month. And then Halliburton was also a good one. Look at Halliburton. Oh, no, that's not Halliburton. Right here. Halliburton was also a green month. So the whole market's red. No, it's not. Only some sectors are, but there's a rotation that is occurring. If it's not in tech stocks, they putting their money in somewhere else, right? XLP, if you look at XLP, the reason why XLP been running so crazy is because XLP did a 3 last month. XLP, the reason why we've been in KR, MO, because XLP is doing this. It did a 3-2, right? Before now it's reversing because the whole market is like fucking going to shit. Or not the whole market, but you know what I'm saying. But before that, before the market wanted to reverse, it was going crazy. And so I'm looking at sector strength. So like, now that we're going into the new week, I'm looking at the weekly charts, right? So I'm going to be like, okay, oh, that's a 2-week chart. I'm like, okay, so XLP is a red week now. So we can possibly go 2-2 down on the week, right? So if XLP wants to go 2-2 down on the week, then I'm going to say, yo, we can short XLP stocks. We can pivot to downside, right? Or if it wants to go 2-2 up on the week, then I'm going to say, yo, let's look at XLP stocks to the upside. Daily call, weekly calls. Okay. Weekly entry. Okay. So if XLP next week, if XLP does this, I'm going to think about longing XLP stocks because we went 2-2 rev on the week. But if XLP goes the other way, then I can short XLP stocks. Target, the Walmarts, the KRs, not MO. Well, actually, no, I can short MO on a weekly because I still have 218s. When buying an option contract, do you buy the bid side or ask side? Ask. What is your philosophy in option contract pricing? I like to buy the ask side because I like to be in. I don't like, where will they be recording? We've been here tonight, but I can't focus anymore. No, we're done, bro. Don't worry, we're done, my guy. I'm going to upload it into one of the channels. I'm going to figure out what channel. I'm probably going to create a channel where it's like, oh, these are the streams or the videos or whatever. And so I'll upload it, but it just stay around for that announcement. Stay around for that announcement. Thank you. I appreciate that. Sorry for taking you guys' time. I didn't even expect us to go this long, but thank you guys for sticking with me. I really appreciate you guys for sticking with me. I hope it was informative. Thank you. I appreciate that. Thank you. I've learned from the best. So I would definitely not call myself the best. Like I learned from everybody. I learned from my members too. So it's all a learning experience. Like I appreciate you guys for sticking through. And I hope you guys learned a thing or two. And please remember to ask questions. Like we want you guys to learn this. Like you can, it's at the point right now where you can ask any of the members who've gotten this shit. They can let you know. They'll let you know how the strat has changed their lives, how the strat has changed their trading, how this group has changed their trading. And that's why I love it. That's why I'm glad that we're able to provide that space where we can help people actually learn how to trade and be profitable, provide that community where we're all learning together, growing together. There's nobody talking shit about each other. I mean, we joke around and stuff like that, but yeah, so yeah, and for those of you that are not in ADX trades, feel free we have 3-day free trial. Feel free to join that. And then if you guys want to stick around for the whole thing, it's $30 a month. And I like to say, I know I shouldn't be saying it, but I like to think of it in my head. I'm like, man, if I ain't making you $30 a month, or if I ain't giving you $30 worth of value, then I ain't doing what I'm doing, right? So that's how I think of it. Like I'm doing something wrong if I'm not at least giving you at least $30 of value, or making that much. I'm doing something wrong. So yeah, I appreciate you guys. I'm gonna have this recorded. Thank you guys for stopping by, and you guys have a wonderful Saturday. And I'll see you guys for the watch list next week. I'm sorry, tomorrow.
All right, 8X. Have a good night.
You guys have a wonderful night.